Good day and welcome to the Global Trade Professionals Alliance Business Health Check. This is also the second last in our e-commerce series of webinars. It's wonderful to see so many familiar names having joined us today and a couple of new faces as well, proverbially speaking. And it's delightful to have your company over the course of this webinar. Just a reminder that we will be recording today's session and we will make that session available then on the GTPA website after the fact. I'm Collins Rex, I'm a director with GTPA and I'm your presenter over the course of today's session. Please take note of the disclaimer on the screen. Very important to note that all the information we impart is of a general nature. If you do choose to use it for business purposes, please make sure that you get the appropriate advice first to make sure that this is relevant to your business situation, which obviously is unique to you. Now, today's session is all about risk management. We've talked in some detail over the last 3 weeks about various aspects of e-commerce, and the reality is that selling online has definitely saved many a business in this time of COVID shutdowns. However, every business, whether it's online or physically based, comes with risks. Any business activity needs to be seen in the context of your business and the risks that your business needs to be aware of. Knowing what the risks are means you can prepare for them, and it means you can mitigate them. There's no point in pretending that risks don't exist, because they don't go away just because we want them to. So what are we going to cover in today's session? Well, we're going to look at business risk, information risk, transaction risk, operational risk, unauthorized access and security risk, and technology risk. So let's get straight into it. Business risk. What do we mean by business risk? Well, business risk is anything that fundamentally affects the way in which your business functions. And it's all those things that underpin the way in which your business should have been set up in the first place to sell online. So the first business risk is not knowing the law. And just because you're selling online doesn't mean that you do not need to comply with regulations and the law. So some of the regulations that we're talking about are those regarding starting and operating a business. Every jurisdiction is different, but pretty much every jurisdiction in the world requires you to have some form of registration process when you are engaged in business activities. Now, we know many businesses operate informally. They never have a formal structure as such. But it also depends on the size of your business. As long as you're selling ones and twos and you're selling here and there over the world and you're posting things, you can probably sail under the radar. However, you will be on the radar of your regulatory authorities as soon as you start doing substantial business. And it is also important to know that irrespective of how small your business is, your tax obligations are your tax obligations. And you could be in a world of pain if you don't register appropriately and pay the appropriate taxes and declare your income from your business. It's also very important to know the law regarding importing goods into your chosen market. Now, again, every market is different. Every market has different levels at which tax accrues on imported products. And when you're sending something in the post to an individual in another country, that individual is essentially importing that good. It doesn't matter that it didn't come in a container on a ship and there wasn't a lot of it. It is still importing, and you are an exporter. So you need to understand that. Is the person who is purchasing from you going to be slapped with tariffs and duties, or indeed GST or VAT when they collect their goods? You need to be aware of that, and you need to take that into account when you are pricing. You also need to know the tax law of your own jurisdiction and that of the country to which you're exporting. So those minimum thresholds and so forth are really important to be aware of. Lack of understanding of consumer law in your chosen market could be a problem. So for example, if you are not conscious of what the consumer law says in your chosen market, you might be implementing the wrong returns policy, and you certainly might be implementing the wrong liability policy. You need to understand what your liability for your product is under the law of the country to which you are exporting it, even if you are selling ones and twos. Now, one of the other risks that you need to take into account from a business perspective is what happens if your chosen online marketplace, whether that be Amazon or eBay or one of the multitudes of others that you might choose to sell on, you might be selling through eBay or so forth. What happens if that marketplace floods the market with products similar to yours at a lower price? You might find that the units that you have sitting on this marketplace simply don't move, or you are forced to lower your price along with everybody else's, and that could seriously affect the profitability of your business. You also need to be thinking about your domain name and whether you have appropriately registered and protected that domain name. If you haven't, you might find that you lose your domain name to a rival organization, you have to change your domain name, and you lose all the goodwill and all the custom that you have built up over a period of time. You also need to be conscious of the quality of the products that you are sending into a market. Poor quality control on your side will result in products being returned, and obviously that's not a great position to be in, but you can also suffer reputational damage, and that is very, very difficult to get back from. If you have a badly thought out returns policy, or you haven't appropriately in the right place so that it's really obvious to your customers, published your returns policy clearly on your website, you could be opening yourself up to any number of problems. First of all, your policy is going to result in goods coming back that you might not want to accept back in a condition that you do not want them back because they've been worn in the case of clothing or damaged in some other way. But if you haven't clearly stated under which circumstances you will be taking back the goods, you will have to take them back anyway. If you haven't clearly published your returns policy, again, you can be in trouble with the law in the country that you're selling into, because there are certain rules and regulations that govern how returns policy need to be stated, where they need to be, how visible they need to be on your website, and so forth. So do your research. Order fulfillment issues. So you take the orders, but you don't deliver the goods, or you don't deliver the goods in an appropriate amount of time. You are going to have to return people's money in the first instance, but you will also suffer enormous reputational damage, and that is very hard to come back from. Remember, when you're selling online, you have a shop front that is open to the entire world, and the entire world has an opinion. If you do something wrong by your consumers will tell others, and believe me, you don't want that to happen to you. Now, let's talk a little bit about price. Price is one of the major business risks that you face if you are transacting online. It's a major issue for any business, irrespective of the business model that you choose to employ. But it is all the more important if you're selling online to be conscious of exactly what it is that you are paying, what it is you are charging, and what your margin is. So some key definitions: cost, price, and margin. Very important to know these three, and very important to know the difference between them. Cost is the total of all the expenses associated with producing and selling a product. And if you are selling it overseas, it is all those expenses associated with producing it and selling it overseas. And selling it online is just that. Price is the amount for which you, the exporter, sell the product, and it's determined by the exporter's marketing strategy. So you are going to fix a price dependent on how you have decided to fix that price. And in a moment, we're going to look at the traditional pricing models. Margin is the difference between the total cost per unit and the export selling price. It's determined by your corporate objectives. And again, we'll look at that in a moment. So cost is everything it costs you to produce this good and to get it into the hands of your consumer. Price is the selling price, the price for which you give that good to your consumer. And margin is essentially the difference between the two. So the traditional pricing models, there are three traditional pricing models. There's cost plus pricing, demand-based pricing, and marginal costing. So cost plus pricing, this is the one that most businesses use. It's the simplest, it's the least risky of them all, but it does fluctuate. So cost plus pricing, you work out the total cost that it costs you to produce this good and to get it in the hands of your consumer. If you're selling overseas and you're selling online, you also need to take into account all the extra costs in getting that good from one country to another. And in a moment, we're going to look at a pricing structure around an actual good that's being sold online. So it's that cost plus an agreed margin. You are going to decide what that margin is, or your customer is going to decide what that depending on what they are prepared to pay. And there are many dynamics involved. But essentially, at its simplest, cost plus pricing means everything that it costs to produce the goods and get it into the hands of the customer, plus a profit margin over and above. And that will determine the price. Demand-based pricing is pricing according to demand. Higher demand means higher price. Supply and demand is a very tricky thing, though. It's generally a lot easier to determine supply versus demand when you're selling in a more traditional way, i.e. through bricks and mortar, than it is to do online. You need to understand that traditionally, the lesser the product is available and the higher the demand for that product, the higher the price that can be contained in that product. However, when you are selling online, the supply pretty much always outstrips the demand because there is such a wide variety of product available and so many different pricing structures available. If a consumer doesn't like your price, they can almost certainly find a very similar item, if not an identical one, at a lower price. And if they really want an item, they don't need to buy it from you. They can buy it from somebody else. So that traditional cost based on demand price, or the price based on demand, is turned on its head when you are selling online. And then finally, there's marginal costing. Marginal costing works the other way around. In marginal costing, you decide upfront what the margin is you want to make on a product, and you then work backward from there to determine the price. So essentially, your drop dead margin. You might decide that you always make 20% on a product, irrespective of what the market will pay, what the market will allow, etc. And that is how you price. Now, it's a very dangerous pricing model because you might be pricing yourself out of a market. Your 20% might make your product unaffordable and therefore it doesn't sell, or indeed your 20% might be too low and you could be doing yourself out of good profit that you could otherwise accrue. But now let's look at an actual selling pricing model, and thank you very much to our friends at FIEL for these figures. If you look at a product like milk, and this is based on an actual Australian case study, chose a market because it's easier to give you an example when we choose a market. And this is a product that is being sold online into China. So if we look at, take a brand like Devondale, for example, on the second line, it's UHT milk. It's milk that has been treated so that it is shelf stable. That price normally is $3 for 3 liters. That same product is selling on Tmall at $17 for the 3 liters. Now you might look at that price and say, oh, wow, it's far more profitable to be selling it online. So far better to have that product listed online and get the $17 for the 3 liters instead of the $3 that you would get if you were selling it to a supermarket. However, let's now start looking at all the costs associated with selling that same product online. One of the first costs is getting that product to the consumer. It's going to go via air freight or it's going to go via sea freight. In the case of the Devondale, this is a product that is shelf stable, so it could go via sea freight. And then there are local charges in the destination. So here you can see that if you were air freighting that product and you were selling it from Sydney or Melbourne or Brisbane, the general cargo rate is about $1 per kilo. However, a perishable product is accruing a charge of $1.80 a kilo. Now that includes getting the product from your factory, from your facility to the airport, and then from the airport to where it's going in its final destination. If you were sending it by ship, you can see the prices there, and you can also see those local destination charges, which include export destination to warehouse, destination port charges, etc. Now, another layer of cost is customs clearance. So that same product that you were getting that higher price for, you've already added a layer of cost in the freight to get it into the hands of your consumer. Then there's customs clearance. So general cargo is about $2 per order. Perishable cargo, however, is more expensive because it's more fiddly to deal with, $3 per order. And that includes using a temperature-controlled warehouse for perishable products. Then we look at VAT, GST, the tax that everybody pays, the consumer tax. There is no duty on products like milk into China from Australia because there's a free trade agreement in place, but the duty and the VAT, certainly the VAT still applies. So in the case of that same UHT milk, there's a 33% VAT that gets added onto it, and e-commerce duty, etc. So there are additional layers of cost that go onto it. Then you have to get the product from the port into the hands of the consumer. Now, in the case of that same UHT milk, you can't use domestic air freight for it. So it can only be transported by truck and rail. The courier charges there for the perishable product, $3 a kilo or $1.80 for general cargo. So all of those costs have already been added onto the general costs for that product. Then we start looking at marketplace and platform charges. Now, we looked at Tmall's prices here. Initially, we said we were listing the product on Tmall. So Tmall requires a security deposit of $25,000, an annual service fee of $5,000, a commission of 5%, an account settlement period. So Tmall gets the money. Tmall pays the money over to you, the seller, once a month. So that affects your cash flow. And then using Alipay through Tmall, which is pretty much the only way that you can, there's a product plus logistics price, and that is around about 0.1%. JD, you can see their prices by comparison quite a bit lower. Their commission is higher, however, but their settlement amount is also monthly, and they do take payment through PayPal. So bearing in mind that all of these additional costs, the security deposit, the annual service fee, etc., need to be amortized over the cost of your product. So when we start looking at the overall product analysis and we look at our UHT milk that initially was $3, now the $17 that you thought you were getting for that product and were getting, the truth is, by the time you've amortized all the costs over that, and you can see the numbers there, what you're actually making on that product is $1.23. So it's not quite as rosy as you might imagine. So why have I shown you this analysis? I've shown you this analysis so that you will do an accurate costing on your product before determining your selling price. You need to understand that just because you see a high price of a competitor product, for example, listed online, you need to take into account what that price is actually translating to in terms of profit. And it's very important that you get your pricing right, or you suffer enormous business risk. So the next risk that we look at is information risk. What do we mean by information risk? Well, this is anything that relates to information to and from your business and about your business. So here it's things like IP theft. What happens if you didn't register your trademark and your trademark is hijacked by someone else? Or indeed you did register it, but somebody's just using it anyway. Again, reputational risk, and your IP is valuable and you will have lost it. Things like libel, defamation, slander suits resulting from information published on your website. So if you publish information on your website and that information turns out to be inaccurate or dangerous to a consumer, you will be facing lawsuits, and those are very expensive to deal with. Also, things like incorrect product information, which could lead to accusations of false advertising. And this is particularly rife in products that are considered to be in any way related to the health of your consumers. So let's say, for example, you are selling a herbal tea and you make a claim that this herbal tea will result in weight loss. You better have the right scientific proof for that, and you better have done clinical trials, because if you've made those claims, somebody drinks your tea and does not lose weight, well, we all know what's going to happen. Also, unsubstantiated claims relating to accusations of false advertising, and that is very closely related to product information. If you advertise something and that advertising is seen to be false or misleading, you will be faced with lawsuits. Also, things like the interception of credit card information that could lead to fraudulent transactions. If you have used that credit card information, stored it in some way, it was accessed and used fraudulently, you are going to be up for it. Also, of course, understand that you might be given a credit card that is not the card belonging to the person that has presented it to you. You will in good faith take the payment from that credit card, but the bank will come after you if that card has been fraudulently used. And then, of course, things like published material, whether it's on your website or whether you've published brochures, etc., or you're advertising through digital channels, including product names, you need to understand what they are in foreign languages. And that is any language which is not yours or your websites or your products, because some of those translations could end up making your product name, your trademarks, etc., offensive to your chosen market. And of course, that's going to have all sorts of risks for you. The next risk we'll pause on is transaction risk. So here we're talking about risks that relate to taking and giving money, essentially. Perception of, or rather interception of customers' payment details. So your customer lodges their payment details through your payment gateway or on your website, and somewhere along the line, a nefarious person has come along and they have hacked your system and they have stolen those details between the customer lodging them and you receiving them. That is a transactional risk. Obviously, you're not going to get the money, but also the customer is going to be fraudulently charged for something that they haven't received. When that occurs, it is your responsibility, not the customer's. So you need to understand that that transactional risk is your risk to take on, and you need to have the appropriate security measures in place on your site to ensure that this cannot happen. Customers can use stolen credit cards to pay for products. They'll pay for the product, they'll get the product, but the money will they will come back and take the money from you. So bear that in mind. And then, of course, fraud. Customers are not always above board. They're not always doing the right thing. Fraud is a very real problem when you are selling online, particularly if you're a smaller business and you don't have the necessary checks and balances in place. And a major transaction risk for you is one that relates to cash flow. And that is because payment gateways are not transferring funds timeously. Every transaction that goes through a payment gateway has a lag in that money making it from the customer to you. In some cases, funds are transferred only once a month. In some cases, they're transferred once a quarter. If, for example, you have published an ebook and that ebook is being sold through Amazon.com, you will probably be getting any royalties from the sale of that book once every quarter. It might even be as infrequently as once every 6 months. So you need to understand how long it's going to take for the money to reach you when you are using a payment gateway, because there will be cash flow implications, and that is a very real transactional risk. Operational risk. Now, what do we mean by that? It's a bit different from business risk, although the two are quite closely interconnected. Operational risks is all the things that affect the way in which your business operates, the way in which your business functions. Here we're talking about things like website crashes. So you might have a really great business going, you're selling hand over fist, and your website can't cope with a traffic volume spike and it goes down. It's not like a store where you close your doors for a short period of time and your customers might just go next door and then come back again, and next door doesn't sell exactly the same product. When you're selling online, your site goes down, your customer simply moves to a different site selling the same product or a very similar product. Brand loyalty is something which doesn't really occur online. So bear that in mind. You lose the site, you're going to lose that customer possibly forever. Logistics issues. You in good faith take the money from your customer, you in good faith ship the goods to your customer, but those goods do not get to the end customer for whatever reason. That is a major operational risk, and it is one that is going to cause you a lot of heartache because it's going to damage your reputation. So at the moment, and I'm based in Melbourne in Australia, Melbourne has a very strict COVID lockdown in place. That COVID lockdown has also affected distribution centres throughout the state of Victoria, but particularly in Melbourne. All distribution centres have needed to reduce their staff by 30%, which has an enormous knock-on effect to how quickly parcels can be sorted. And this is applying to our Australian Postal Service as well in the city of Melbourne. So in that case, I order a good from an Australian supplier, possibly even a Melbourne supplier. I have a certain expectation that that good will reach me within a matter of days. And usually, under normal circumstances, I know that if I purchase something from this supplier, I will get those goods in 2 days. At the moment, those goods could take 3 weeks to reach me. There are all sorts of logistical issues around how those goods are now reaching customers in the city of Melbourne. When those goods are coming from overseas, the problem is just compounded. So you need to understand that the customer is going to be disgruntled, not with the postal service, but with you, because you used to get the goods to them in 2 days and now it's taking 3 weeks. They're going to want to be cancelling that order. So bear that in mind. Unexpected freight pricing increases can create all manner of problems for you from a pricing perspective. If you had priced according to a certain freight charge, and under COVID-19, freight charges have ballooned all over the world. They've ballooned not just in air freight, which is pretty hair-raising, but also in sea freight and rail and every other method of transport. You need to have taken those price increases into account and changed your pricing accordingly, or else you will suffer because your margins are not going to be what you expect them to be, and you might actually find that you're losing money on a product. You could also find that if you are passing those freight charges on, your customers are not going to be purchasing from you. They're going to find an alternative way of getting the same good. So in the Pacific at the moment, for example, many businesses that were selling online cannot sell online anymore because their freight charges have increased by 200% and 300%, making the products way too expensive. Also bear in mind that search engine algorithms, the ones that you depend upon for people to find your site through the search engines, could change. And that means that the traffic to your website could drop dramatically without you understanding how that's happened. So if you are depending on a certain number of visitors to your site to translate into a certain number of sales, if those visitors drop, the sales are going to drop in a commensurate manner. And that, of course, is going to have huge problems for you from a cash flow perspective. Unauthorized access and security risk. Now, we're not going to spend a lot of time on this because we've had several sessions over the course of the last few months on cybersecurity, but it is important to note that if somebody hacks your site, they steal data off your site, and that data belongs to your customers, you are going to be liable for any losses that your customers suffer. If you have become aware of a breach and data which has been taken illegally, you need to let your customers know that that has occurred. You need to tell them your site has been compromised. You need to tell them that there is a chance, even if it's a slim one, that their data may have been compromised and therefore they need to change all their passwords, etc. The onus is on you to do that. If you do not and the breach is discovered, you will be fined, and the fines can be substantial. Of course, this also relates to your own data. Your data is very valuable to you, information about your business. If that has been compromised, you could suffer losses, and that includes the theft of trade secrets. So if through a data breach on your website, somebody has got access to your recipes for the food that you produce, or the plans for a product that you manufacture, engineering drawings, etc., you can suffer enormous loss as a result. And then, of course, those security breaches resulting in your website being hacked, those cyber attacks, you need to make sure that your site is appropriately protected with the necessary firewalls, gateway protections, etc., so that that does not happen. It only takes one breach of a customer's information. Your business will suffer reputational damage, all manner of losses financially, and almost certainly also fines. So it doesn't take much. You need to be taking care of the security of your website and anything associated with your site and the records that you store relating to your customers and yourself. And then finally, there's technology risk. Now, technology, as we know, is something we cannot live without, but in many cases, it's also something we really struggle to live with because it does cause trouble. Technology is not flawless. So when we're talking technology risk, we're talking things like errors or omissions in software design, and this particularly relates to your e-commerce and payment technology. So the technology that you've used to build your website and to build your e-commerce site, and we talked at length about the difference between a platform and a marketplace. Payment technology. If you are using a payment technology that is outdated and therefore doesn't have the right security layers, etc., you are going to run into all manner of trouble. Software that you might have that deals with the automatic processing of your orders, for example, that is insufficient to the task. So you might have installed software to deal with order processing, accounting, etc., invoicing and so forth, when you were a really small business selling ones and twos and threes and fours of units. Now your business has grown and you are selling hundreds of units or even thousands of units. That software won't be able to cope and it's going to break down and cause trouble for you. ISP crashes. So what happens if where you service your website goes down? How do you deal with that? And of course, inadequate security that results in fraudulent interception of payment information or data breaches of your customers. And that is because you do not have appropriate technology in place to protect from a cyber perspective. And then very importantly as well, technology risk resides in not being able to appropriately deal with your customers. So if you have a customer relationship management software package and it's integrated into your e-commerce system and it's not done well, you're not going to be able to get as much value from that system as you need to. You're not going to be able to communicate appropriately with your customers. And of course, you might have a CRM that's not integrated into your e-commerce system at all, which means you have no idea what it is your customers are purchasing, how they're purchasing, etc. And again, we've talked about this at length, so we don't need to go into too much detail, but understand that that is a technology risk that you will be facing if you haven't thought it through appropriately. Now, we've covered a lot of ground today. I'm conscious of the fact that you'll probably have heads spinning about all the things that we've talked about today. We didn't have any questions ahead of today's session. I think it was one of those things where people were just kind of wanting to understand more about this before the questions arose. And I haven't seen any questions come up in the Q&A panel either. What I suggest you do is think about the risks that your own business could be facing. If you have questions around some of those risks that you've identified, flick them through to me on an email. And if I can't help you with the risk that you're facing and mitigating it, I can pass it on to the appropriate authority. It is very important that you as a business do a full audit of all your processes, all your procedures, everything you do related to your product, the production of that product, any changes that you need to make to that product for an overseas market, and the way in which that product is costed and then priced, and the way in which that product eventually makes its way into the hands of your customer. Once you've done that full audit, and it doesn't have to run into dozens of pages, really just bullet points, checklists for yourself, you can then map the potential risk against each one of those line items, and you can put in place policies and procedures to deal with that risk. And I stress, it doesn't matter how big your business is. You could be a tiny business selling small units, but you still need to be aware of the risks you face, even if it is just from a cash flow perspective. Please don't gloss over the risks and hope that they will go away. They will not, and they will cause you trouble in the long term. So be aware of that. Now, over the month of September, as you know, we are dealing with all manner of issues around e-commerce. Next week, which is the final in our e-commerce series, we are going to be looking at fulfillment and logistics. So we've dealt with all sorts of issues around products, around marketing to products, etc. Next week, we look at how you actually get those products into the hands of your customer, whether you are a small operation selling small numbers of units or you are a large operation selling many units. You still have to get it to the customer. And we're going to be talking about that next week. So watch your inbox and, of course, all the socials for the registration details. If you have missed anything from today's session, remember that it will be made available on our website. It has been recorded, and you will be able to access it through our website, www.gtpalliance.com. And there are all manner of other resources there for you to access as well, to make not just your e-commerce business, but your business in general better. So visit the website. If you visit the website, you have a question, you can't find the answer on the website, feel free to drop me an email, and you can see my email address there. And I've also given you the email of my colleague Lisa McCauley. Between us, we can generally answer most questions. However, neither Lisa nor myself is the Oracle of Delphi, so we don't have all the answers, but we do have a network of experts who can help when we are not able to. So feel free to do that. All that remains is to wish you a good day, a good afternoon, a good night, irrespective of where you are in the world. Please take care of yourself and those you love. Stay safe, and we look forward to your company. Same time again next week. Oh, I've just noticed there's a question that's come up here. Somebody asked about currency risk. No, we didn't talk about currency risk this time round, Phil, because I will be talking about currency risk in the logistics session. It sort of fits a little bit better there. But do bear in mind that in that transactional risk piece as well, there is currency. If you haven't taken into account the difference between your currency and the currency where you are selling, and you haven't appropriately priced in the correct currency, you will also be suffering margin losses. But we'll talk about that in more detail next week, because it also intrinsically affects things like how you classify your product and so forth. So we will talk about that next week in some more detail. So thank you very much for your company. We look forward to the pleasure of it again next week. And next week, I will also be sharing with you some information about what we're doing next month, because next month we won't be running our business health check webinars. Next month, there's a whole new exciting suite of things for you to attend, but I'll tell you all about that next week. So thank you very much for your company. Have a good day and farewell.